most of the startups fail on their initial days or due to other factors. Quantum computing was more like a dream, right? But again, there's a limitation to quantum computers. A concept called as power law. The idea is that you invest in, let's say, 20 startups and one is a home run or a unicorn, and you have five or four companies who are kind of giving your 1 or 2x or 3x of your multiple what you have invested.
Hi, I'm Arpita, the co founder of Cashvisory. At Cashvisory, our aim is to get every young professional to their first investment. Today, we have Afreed from the investments team at early stage VC Golden Sparrow, and we're going to explore everything about the VC and startup world today with him. Welcome, Afreed.
Thanks, Arpita, for having me. Great to get started and wanting to share more.
Awesome. So, Afreed, let's get to the very beginning. How was your journey from Bangalore to becoming a VC?
Yeah, thanks for asking that. I kind of resonate on that. I'm actually from Chennai, but moved to Bangalore, spent 18 years here. I live in Central North, and yeah, did my schooling here, engineering in RV, and post to that, I worked in IIC Bangalore in research for 2 years and explored the venture side because deep tech was a thing which I wanted to create impact in, and well, now I'm in Golden Sparrow, so that's about me.
What drew you to venture capital initially?
Well, I'll put this way. Research and development is what I was doing back at IIC Bangalore, and I saw the startup segment in uh, emerging out of here in other sectors like consumer, fintech, and software. Deep tech was on that corner to rise, and people needed more infusement of capital in that direction. And I felt I was a suit in that corner, so I tried my chances, and well, I'm here.
Would you like to share more about Golden Sparrow and the story behind it?
Yeah, sure. So Golden Sparrow is a US domiciled fund. It's a $8 million micro VC investing in pre-seed, seed stage startups in deep tech, SaaS infra, AI infra, and fintech infra. And it's a three member team. And yeah, there's more. We have invested in 7 investments across 1.4 million deployed, looking to deploy more.
Amazing. So, for the benefit of the audience, since you mentioned Golden Sparrow invest in pre-seed seed stage, so just help to elaborate a bit what are different stages of venture capital.
Okay, so we come in the early stage. If you look at the private investment class, it categories into three sectors, which is early, growth, and late. And early is more about the journey from 0 to 10 million, and then 10 million to 60, 70 is somewhere growth, and then the later upwards is late. And VCs tend to work across. This is the playbooks are different in investing in these three sectors.
Right, right. And, talking about this investing, where does this money come from into the VC world, right? What kind of people or organizations invest in, get into venture investing actually?
Interesting question. Not many people ask this. We don't pull money out of thin air. But the answer to this is usually the people who invest in a fund, venture fund, is called as limited partners. These limited partners can come of these kind of categories. One is institutional. These are funds of funds, or either funds of their own investing across different asset classes. Second would be family offices, which comprise of like generational wealth. And then there's angels or HNIs themselves or individually putting checks into funds.
And would you say all these different, groups of investors, they participate in all the different stages you just spoke about, or there's like, one set all
There
in
is
investing?
limitation. There is limitation for HNIs in angels because of the amount of corpus or AUM they hold to deploy. So most likely they are to do early stage investing and public investing on stocks. So these are the two things I feel. But the rest of the follows, I think family offices can do growth and institutional across early and growth and late stage as well.
Interesting. So, even as a founder, we interact with VCs all the time, but to be honest, we are always on this side of the table. So it's really interesting to
I think
hear.
the tables has reversed today.
I know. Yes,
Yeah.
I've been asked a lot of questions, so today is my chance. So I wanted to know, what exactly happens from, start to finish in the venture capital. You've mentioned about the sources of the fund. So what happens then, and then up till the, investing in startups and then going along with them until the exit.
I think you're looking around the fund life cycle as an answer, right? So, a typical fund life cycle is around 10 plus extendable 2 to 3 years. Um, Going around it elaborately, right? So, you try to raise funds from these limited partners or possible limited partners who would want to, partner with you and kind of invest in this asset class. And you raise that kind of capital along the process of 2 years of deployment. So let's say that year zero to year two is my deployment period across startups, and my portfolio construction, let's say 20 startups in this case, and I'll be continuously raising capital from that corner and deploying in this process in till the second year. From second year onwards, I think it's more on the basis of governance and advisory for that fund basically. So from year 2 till the year 10, or I mean year 8 you could say, you're kind of working with the startup very closely and helping to understand what is their requirements, or as such just monitoring them from the outside as well. And then from year 8, or let's say year 10 going forward, it's more about seeing how you could kind of leverage out of this as a liquidity point of view from the startup. And at that sort of time, you have already kind of fueled these startups to kind of grow so much, and they kind of become very big enough. They help billions of people, then part of contributing to the GDP as well.
Interesting. So would you say that, for from a typical timeline for the fund to mature would be around 10 years for these groups
Yeah,
of people who invest
yeah, it's a long
into.
investing strategy, but it's also a recurring strategy in this sense, because after the deployment of year 0 to year 2 or year 0 to year 3, your first fund is completed.
Hmm.
You start and raise another fund, and then you start keep doing this again and again. So it's like you have multiple funds kind of stacked around the
So typically,
organization.
like when you run another fund, do the LPs from the previous fund also participate? So for them, also it's a recurring thing, or once invested, then they wait for the next 10 years to redeploy their.
It's a yes or no question. For some people, it's about the money, like and plus the interest, whether they want to go forward. So here, the simple answer is it's a neutral ground. They would want to kind of go ahead if you've kind of shown that kind of performance.
Right.
For few, for few, it's more about diversifying their portfolio and something. There are a lot of nuances.
So how would you, place startup investments for this group of people, your LPs, HNIs that you are talking about as an asset class? What are they in it for?
Yeah,
When they
I
invest
think
together.
if you see bonds as let's put all the asset classes in a spectrum, right? So you have bonds which are more less risky, and then extreme opposite is VC.
Yeah.
A lot of illiquidity here. People say houses are also illiquidity, but I think we know this answer. I think it's much easier today to get liquidation out of houses, but VC is on the very extreme end because you are investing in a potential company from day one. And the reason there's a risk to reward game in this, even if it's like very highly risk. The idea is that you're building the company from zero valuation
Yeah.
to unicorn. So
Yeah.
you see the difference of the delta here.
Yeah.
The multiplier effects follows on. And I think your posing question is like how risky is this and how would you make money out of this.
Yeah, what do they think? I mean, I'm sure people have made money, but when a person is getting into startup
Yeah,
investing as an investment instrument,
yeah.
because not everyone is a startup founder. Like we have invested our capital in our startup that's like out of passion,
Hmm.
but an HNI with a certain fund would take it up as an investment instrument. So another follow up question I was going to have is, compared to investing in public listed companies, that also in a way putting money in someone else's belief in someone else's company, and compared to putting money in startups. as
Okay,
an investment?
I'll break this into two answers. So, reverting of, what are they getting into? You know, so let's put this way. Okay, so most of the startups fail on their initial days or due to other factors, even at a certain stage of point. And you would say that these are illiquid assets, and you don't see the money of it, right? But you do see unicorns coming out of them. The idea is that they are very less, right? So less and more. So the idea is this a concept called as power law. The idea is that you invest in, let's say, 20 startups, and one is a home run or a unicorn in this sense or whatsoever, and you have five or four companies who are kind of giving your 1 or 2x or 3x of your multiple what you have invested, and the rest as write-offs. So the idea is you take a cumulative, average across the sense, and then you kind of gain returns out of it. And these kind of, start from 1.5 till 15, and 15 is also possible. I think Hummingbird did 12, so I'm just putting out as a range here. So multiple funds have their MOICs depending on the stages of the fund size and the
And they
geographies
know
investing.
that the risk
Yeah,
is
they
a
know
calculated
it's a
risk.
very I wouldn't say it's a calculated risk, but at least it's a risk. You know what you're getting into.
Yeah. What do you do for your personal finance? Since you're on the topic of investments.
So I told you, right? I'm an engineer. Did a lot of R&D work. Very bookish to that, and ended up in VC, which is the most safest asset class, which does not require any financial knowledge as of now. uh, but personal finance, I think at today's money, what I do is I kind of categorize it into three categories. One, I put it in a deposit, but presumably I'm not going to touch that money for the next 1 or 2 years because I don't need it. I need that commitment after the 2 years. Second is an emergency surge kind of a fund or money which is just there, acting just at any possible time might need. And obviously the third would be just for the day to day, commute and expenses along the way. So I think I keep two different accounts for the deposit and the emergencies, a separate account, and one for the expenses is a separate account. And by the way, I don't use any credit cards, so that's
Interesting. I think one thing we always try to promote is the discipline involved in personal finance. I think managing your personal finance well is a lot about building good financial habits
correct.
rather than the knowledge. So you've mentioned your day-to-day expenses, your emergency funds, your also 1 year, 2 year kind of goals. For mid or long-term goals, what do you think you would have liked to do or you would like to do in future? Would you like to get into SIPs, index investing, stock investing, or you don't intend to, or someone else does it for you?
I would say this is a Mimi problem. People who are tending to be in the investment side would not want to get into this. I feel so. Some people do. But mentally for me, I already kind of involved myself in the private private segment of investing, and then I use certain information of public investing. If I go around doing this again, I hope my brain doesn't implode, uh, because again I'll go read that public company strategy, the earnings per share, and what sort of things. Like go read their quarter letters, or it's just going to be too much information to grasp, and going
It's a
around
lot of
it.
additional work.
Even SIP, right? SIP also they have only very few metrics to invest in, and but again, I just just doing that investment and seeing that is it performing really well. From an investment professional point of view, doing another investment feels a more mental brain load. I prefer to stay away, but rather I rely on immediate relatives who do this.
So yeah, I was saying that interestingly, people who are not in the investments sector or do not have finance background, they have this another challenge that they have to start from scratch their entire research, and their major challenge to get started with investments is that it's too new, and their main core job is too different. Like either they are in tech or something else, medicine. So for them, it's very difficult to get started. So I think the challenge for both sides, what I'm seeing is that you don't want to get into all that research and all that additional work. So having today we have investment apps on the tip of our fingers, right? So
Correct.
having it so easily accessible still in a way has not helped to cross that bridge. Would you agree with that?
No, I
That,
do
that
agree,
hassle.
right? Information is available. It's just that, not everyone is right. Investment is not about being right, or being wrong or whatsoever. It's see where money involved, risk is involved, and that's where emotions also lie. And there's a lot of factors involved around it. You just don't want to see your money go away, and that's why, right? If someone who's stepping into investing in stock, it would be like some extra cash which would they have, and they're ready to let go of that if possible. It takes a lot of courage when it comes to that. And second thing is the amount of information today is available, outside. It's just that they need to access it. A lot of enthusiasm needs to come along the way with the courage going forward.
Yeah, yeah. And since you mentioned extra cash, I think a lot depends, especially when we are talking about young professionals. A lot depends on,
And you're
which
referring to
industry.
Gen Zs, right?
Yes. I do not belong to Gen Z, so I'm a bit hesitant to answer. That makes me feel very old. But yeah, I mean, I would say Gen Zs to even like, younger millennials today. It really depends on the industry you work in, how your trajectory is in terms of like your income growth over the years, how
Correct.
you plan to put aside that extra cash you mentioned for into wealth building. So coming back to at least the industry you are in, would you mind sharing how is the other VC teams compensated?
Yeah, I think as I told you before, right? If I had money, I would give it to my relative and use the 220 model. The same 220 model applies here. In this case, so let's dissect 2 and 20. So 2% is your management fee. So let's say you're giving. Let's say I start $100 million fund, and 2% would be my management fee, and that would be per year. So basically, I'm using 20% of that corpus to run the show. Sometimes these funds tend to take that to 1.5. Some people do 1% also. Depends on the number of, it depends on the fund size also. If you're dealing with, let's say, $1 billion fund, you don't need a 2%. You can just take 1%. But if you're dealing with a smaller fund, that 2% makes sense. But if you're dealing with multiple funds and it's been, across and everything, and, running it might be a little higher also. So, but that's per year. So that translates from year 0 to year 10 as per the fund cycle, and that's like 20% of the corpus, 2%. That is that. And coming to the 20, right? This is the part where it gets interesting, right? Let's say for $100 million fund, I make 3x. Okay, that is 300 million. And 100 million is the initial capital which I had kind of, fundraised. So I give back that $100 million to my limited partners. Now there's $200 million in profits which are available. Now how is that going to be dissected? So simple way to put this is 80% of the capital will go as profits will go to the limited partners, and the 20% is for the team to share.
Right.
But
So
there are more nuances into it. There's like waterfall involved around it, which involves IRR as a perspective. I think let's keep it simple for now. It's 220.
so coming back to your work, right? What are the latest trends in space tech, semiconductors, quantum computing, climate tech?
So, as we say, we have kind of committed to two sectors in two investments. But overall, let's pick space tech first. So, I think the Indian government has been very open about this, about opening the sector, which was very controlled and regulated, to the private sector players, because you see that the innovation lies here, the team of talent grouping up together, because in incumbents it's a little harder to set up that kind of rapid growth and innovation in technology. I think startups are able to do that, and it's economically possible. And as we speak, in a couple of days back, FDI was approved, which is like a whole new thing for foreign
Yeah.
investments to come through. But let's dig into the sector itself. There's upstream startups in space tech, and there's downstream startups. So I think upstream will be more infra focused, and downstream will be more access of that technology infra, and kind of using that as information or whatsoever for the application side. So infra side, people are building rockets who want to deploy satellites trying to reduce the cost of the payload to be reaching
Yeah.
that particular orbit. And coming to satellites, a lot of new technologies come. People are trying to optimize hyperspectral imaging, and then there's SAR coming out in the spectrum, trying to use radio waves as well. So that is in satellites and rockets. Whereas coming to the downstream of startups, people are accessing these kind of satellites, imaging. They're trying to use that imaging, especially for mapping oceans, seeing where other mining facilities available in terrestrials, and going forward, and a lot of other applications around the same. I've kept this as much simple as possible, trying to
Yeah.
answer this. Uh, Second is semiconductors. I think there's a little bit of geopolitical tensions between two nations, preferably between China and Taiwan, and being TSMC in Taiwan having like controlling 50% of the market share in the supply side of chiplets. I think it's now very high time that people are starting to set up these manufacturing plants in other countries, and India is starting to realize that and has already started doing it. A lot of proposals have come through. I think Tata is the first one to kind of get that permission out. But obviously even the semiconductor in itself, right? Like when you're trying to work on these chipsets, like the width of these transistors. Just correcting myself. It's in nanometers. Okay, now according it's Moore's law, it's not a law, the width has to decrease, and as well the number of transistors have to exponentially grow on that line. So I think a lot of innovation has to take place in this corner, and that's where semiconductor will kind of emerge in that category, and different applications and use cases. I've been seeing people building power RFs from here, and they're using a different substrate itself. And another case is some people are making reconfigurable chips. It's an amazing time to be. I kind of see at least one startup every day in this, not every day, sorry, every week, when I'm processing. Semiconductor is that hot right now, and quantum computing was more like a dream, right? Unrealized dream. Now it's being done today. Uh, the idea is that these one qubits are able to solve for so many number of computers and so many bits in a normal traditional classical computer. But again, there's a limitation to quantum computers. Quantum computers are good at only solving certain numerical problems or physical problems. For instance, this is a very good example which comes out of my head. If you give a computer to raw ingredients of a cake, it will give you a cake. If you give more specifics to it, let's say I want a chocolate cake, it will generate you a chocolate cake. Okay, but when it comes to a quantum computing, you give the ingredients of a cake and tell a quantum computer to generate a chocolate cake, it won't be able to do so because it will only possibly generate the multiple outcomes of a cake. It will give you a vanilla cake, it will give you a blueberry cheesecake, whatsoever. But then it's your process to kind of get that out as a chocolate cake. So that's where you see that getting the solution out is a big challenge in the process. That's where solutions are coming into picture, especially for certain use cases. I think here we're seeing a lot of physical problems in today's engineering life, right? For involving around CAE, computer aided engineering simulations. That's where first use case is quantum computing kind of try to solve that problem. And encryption. So we are worried, like the whole, globally everyone is worried that the existing encryption can collapse, and it's called as the Q-Day, if I'm correct. And that's where we need newer set of encryption. So I think there's this one example taken out, RSA as an encryption. So the actual compute hours will take like 100 billions of hours or whatsoever, 1 billion of hours or so to just get it decrypted. Quantum computer is able to do it in hundreds of seconds.
Wow.
Yeah. And now newer encryption is coming on top using these, QKDs, using quantum computing technologies and trying to, solve that encryption. Multiple companies here. Especially this will be very much necessary for data centers and private telecom infra. So climate tech, right? A lot of non-renewable energy sources have been used, and then obviously this has cost and adverse effect to the climate, and a lot of issues about sea level rises and glaciers depleting, and then ozone as a mess. The problem here is now going to be trying to be resolved, trying to slow down the warm part of it, which is in measured in degrees per Celsius. And the way to see this is, first thing is to monitor right now, on try to reduce as much as possible, which is being done by ESG reporting and monitoring, end to end of whatever you're doing. It's done in three scopes: directly, indirectly, and another thing is offsetting your carbon footprint. There are a lot of ways today. Some do it in carbon credit. Some people tend to do a lot of green impact projects around it, or fund green impact projects. And yeah. Now, these green impact projects can involve green hydrogen and wind and basically renewable energy. So people are tending to solve in this spectrum, and I think this is a good sector to be in, especially.
Climate tech is something that I personally always feel very strongly about, because it's a topic close to me. But as a founder, we are kind of married to our own idea and our own startup. So, that's
Well, you
something on
can
the
marry
side.
another one.
No, I don't think legally even that's allowed. So, it's quite interesting that being in VC, you get exposure and you also get to work with so many founders on so many solutions in all these different aspects. So really curious to know on in about career in VC. What are the good things and the bad things you would say?
Very stone cold question. Let's very strong on that, but very hard to kind of say it out. It's not that hard. Okay. Let me put this way: pros and cons. Okay. Pros: you're getting to see innovation from day one, submerged with ideas, founders pitching to us, keep our brains evolved around understanding, or understanding more. It's more about the passion side on that corner, to learn. You get to learn a lot from the founder itself from day one, and possibly seeing, do I see a investment opportunity here, trying to decrypt, trying to connect the dots to the dots. Second thing is this. I think this is the only asset class where a lot of social involvement is there with relations, founders, operators, industrialists. Uh, you know, building a network in this space has been very personal. You tend to kind of work with each other, and plus, obviously, I was not very social back in college days, or didn't have that kind of life. I'm kind of getting to live it now. You can just say it. And another part would be, you are meeting the other set of people who you used to admire. So I would say I've crossed paths. I've just seen on a glimpse, or maybe had one or two exchanges with all the industrialists, like Narayan Murthy and Bhavish Agarwal, couple of them. It's great, just to be
That's
involved
amazing.
around with these
Yeah.
guys also.
Yeah.
You get to learn one or thing or two.
Absolutely.
And yeah, coming to the cons, right? We have to, acknowledge and also agree that we kind of sit across the table. We sit across the table. And more of it, value addition is kind of just, you reaching out, like Arpita, you reaching out to me if you need some help. I'm not with you all the time. It's only when you are in need this one. I'm not part of the operating segment, but I'm more of the part of helping you out from whenever you are in need. I think for some people, like, want to be in action, I think should join a startup from day one. I think that's where some people kind of feel that, they're kind of away, and then they see that as an aspect. That is very true. Um, and third thing is, when you're talking about network, right, when you're trying to build this network with social aspect to this, it becomes very transactional at one point of time. You feel to hate it a lot. Uh, it's just that, it's depends on the person how they want to keep it. I think if you can solve for that, I think it shouldn't be a problem. Some pros are solved for, some cons can be solved for, some things cannot be solved for. I think let's just put it that way and
And also
let
it
it
becomes
rest.
very personal. For some people, the networking aspect, because as a founder also, we always have the investor founder mixers and that networking. It's always there. For me as an introvert, it's been quite a challenge, but that's something that I've grown into
I think,
learning and enjoying
if you
as
see
well.
VC, right, I would say, like, it involves more sales angle, actually. It involves a little more of a sales angle.
Then founders.
Uh,
Are you sure? Not really.
no, but I mean, a mixture of multiple hats
Yeah.
involving around
Yeah.
it. There's thought piece to this, as like, see, so you have sales, you have thought work, and knowledge work, and couple of other smaller segments of, finance, legal, and all those things. I think the sales work, because you're doing a lot of sourcing at the end of the day,
Yeah.
from a VC
So I
point
think
of view.
anyone
That's
getting
where you're
into
doing
this
a lot.
career, they need to be aware that there's this
There's
sales
this, yeah. I
angle.
mean, people don't know this. They think that, you're sitting in these boardrooms
And you're just rejecting startups one after
no,
the
no,
other.
no. I'm not coming to that part. Sitting in the boardrooms, you're sitting across founders. You're doing a lot of GTM work or
Yeah.
ideating work. I think that happens only like once a month,
Yeah.
or let's say a couple of weeks if it's needed, or maybe a quarter also does. But most of the time in the VC side, right, you're doing a lot of reach outs to founders for other possible founders to partner with. Okay, these are other startups.
Yes.
You're doing investing, right? So
Yeah.
you're reaching out to founders, you're reaching out to other possible co-investors, or other angel investors, seeing new deals. Basically, a lot of sales angle is involved there.
And do you also get flooded with like a lot of outreaches from the founders?
Oh, there's a personal thing which I'm good at. So, Arpita, my WhatsApp messages. Do you want to know how many hundred messages I have as of now?
No, that was just
No, give me a number.
how many hundred messages like in total? I don't know, like 200.
0.
You have clear inbox.
Yeah, this is
Wow.
where I personally spend more time. I tend to, see every message and possibly give a response to that other person.
So nice.
I'm not like very stuck to the phone,
Appreciate
but at
that.
least on a very frequently basis
So
that
yeah,
I respond.
You
and
have
work
to
it.
be like
Yeah,
very
and-
active in
Yeah. And
communicating.
I think, people tend to think that, people send a lot of inbound messages to VCs and do get that. But I think it's processable. It's not
Right.
that very hard.
Yeah.
Emails also, it's very easy. It's just a matter of time. You can spend that time. It's easy.
So how does one get started in a VC career? How to become a analyst, for example?
Interesting question. Let's talk about the traditional and the unconventional path. There has been a traditional path of certain set of sector specific people. Like, I have seen a lot of consultants coming out of these strategy consulting firms and moving into VC firms. I'm talking about people undergraduate, did consulting for 2 years, and are in VC firms. And in that VC firm, they might end up there's a pre-MBA category, and there's like a partner role. So partner tracked role, basically. So pre-MBA, it's like only for 2 years, and then partner track is like till the reaching up to the top of the pyramid. But again, when you have to understand the unconventional path also. Like, this is where a little bit importance is given to. Some people are ex-founders. Now they want to kind of experiment or want to still work with other founders, like mentoring them. And it's more of the passion and enthusiasm. Some people know more of that industry, and they feel that they can be able to help them, give quality insights and leads. They can come across the pyramid. Okay, that is one you have to note. And I think I have not done justice on the traditional path as well. Yeah, like coming back to that, I think it's most of the category we have seen over the years were on the consultant side moving to VCs, or IBs moving to VCs across. There are other few people like engineers who are coming into VCs, or people who have been in other spectrum of consumer, fintech, retail, worked in startups, whatsoever. The idea is they're jumping into VC, and that is only realized if they're able to add value in one or the other way. If that is proved out, anyone can become a VC. It's just that you need to know that you can add value to that sector or across the VC workflow, somewhere or the other, on a majority. So I think that's how one can become a VC. And reaching out to these VCs, obviously they do not kind of advertise this, like they're saying that not many of us, now it's started to occur, that you just need to put a mail. Just put a mail, hopefully you get called. So that's how you see.
Interesting. Now, this is my personal favorite question. As a founder, why does a VC invest in a startup?
I think first is passion and enthusiasm, as I told, right?
What do you look for in that?
Okay, you want to understand what do I look for in a startup?
Yeah.
So here's the thing, right? Everyone has a very different playbook. First thing, when you want to invest in a startup, the idea is for me, it's proof of engagement, value. These are the two things which I look for, and across the other multiple, factors like market size, possible customers, or possible revenue which you can generate from here. Technology, because I focus on the deep technology side. I try to understand the technology if possible at so basically three levels: L1, L2, L3. But mostly I can touch on L2, like L1 and L2. L3 will be most likely done within industry expert. Across multiple factors, playbook is very different across every startup to startup. There's no one set specific answer to this. That's all I can put it in words.
Since we have spoken so much about career in VC, really curious to know how do your folks explain your job to your relatives? I'm saying that because it becomes very hard for my parents also when they have to say I'm a founder. I think most people didn't really get it, at least for the longest time.
It's nice that you didn't ask me, but you asked my folks
Yeah.
to my relatives.
Yeah.
So obviously, there's a very simple answer. It's just because of one show, Shark Tank. So they say that mera beta works as a VC, and that is similar to shark in a Shark Tank. But my relatives get a notion that I'm a shark.
It might be.
You need a common ground
Yes.
to get understand it and get acquainted. And obviously they ask for more, familiarizing questions what I do. At the end of the day, they still feel that I'm living in a hysterical world.
Right. So yeah, for the people who your parents explain to for their benefit, let's get into how is VC different from Shark Tank, like from the day-to-day job point of view.
Understood. So I think Shark Tank, right? If you see, these are I think here the word is shark, right? Is another analogy for angel investors, and they are very specific angel investors. I think across the sharks. These guys write checks out of their own, money. But whereas for VCs, you pull in a lot of external capital, and these capital is much larger than what an angel will hold. Let's say if an angel will come in your friends, family, and fools around, and maybe pre-seed, seed, most likely. Series A very rare. But even the check sizes vary, right? Like they might put from like 10 lakhs to 1 CR. That's like a margin. They can't go beyond that possibly, but if they have the corpus, they can go, but it's very risky going forward. They look at their portfolio construction and divestment going there. But for a VC, the minimum check size would start at 100K and go topwards. and that 100K is like what, 80 lakhs,
Yeah.
80 lakhs and going upwards to billions of dollars.
Yeah.
And these are done across the stages, at early, growth, and late.
Yeah.
Right. I think in terms of functionality, right? I think Shark would kind of assist the startup there and would provide a feedback. I think that's where even VCs, right, will provide one or two feedbacks because they have to see a decorum of that professionality involved around it. Obviously, but they will do multiple meetings in the process. It's not just one meeting. You will have to go at least two meetings minimum per fund. You might be lucky. You will do one if you can able to pull that off. In terms of diligence, there's a lot of work done on the background. It's not only an oral pitch. You have to show a pitch deck. You have to share a data room if possible. Your legal work, your financial sheets, and a lot more on the technical side. I think you must be knowing this, Arpita.
Yeah, for a fundraise, we've been through multiple
How many
stages.
data rooms? I mean, like how many data rooms you have to curate, right?
Yeah, I mean, tons of files to make and send over a period of weeks to months at times when the assessment is going on. There are new requirements, whether it's your financial projections, about your even detail of all your roadmaps, everything. So it's
Correct.
definitely not that 15-minute pitch. And
No, it's definitely not 15 minutes. And even in Sharks, right, they only kind of commit verbally, and then they do the diligence on the back
Which is
end, and then it
required.
takes more time again. They
Yeah.
do that, but only the front end is only shown as a 15 minutes, but it's curated for the general audience. People
Right.
have to understand that.
Yeah. So what are your favorite Shark Tank pitches?
I've stopped watching Shark Tank after season 1 because of the work part. I think you can also relate.
Yes.
It's just that I'm working in investing, and you're telling me to see another investing episode,
Yeah.
and then
I totally relate.
it's just too much brain load. I'd rather want to do something else at that point of time. But obviously, I learned few parts of evaluation and assessments using Shark Tank. Season 1 was very great, and it was very great things to learn in the Indian perspective for consumer fintech and other spectrum of climate. I think there was one climate pitch also in that, if I'm correct. A little more dramatic, if you could see. But I've seen Shark Tank US because there was only one season of Shark Tank in India, but I wanted to see how is it in the US. But I felt that was eating up my time. So only few things, two startups, Doorbot, which became Ring, and then which Amazon acquired. And that was the funny part, right? The shark, I mean, all the sharks rejected.
Yeah.
At the end of the day, after a few years, he became a shark himself for one episode.
Yeah.
That's like a
Life came a full circle.
that's a great story to witness. Another thing is Scrub Daddy. Yeah. I like the product because I've done a lot of dishes if my mom is not at home. I know the pain.
We all know that way.
I think we all know bachelors
We all know.
things. Yeah, but
All right. Just closing off the Tank topic, do you think, Shark Tank has an impact on the overall understanding that today an average population has about startups and investing into startups? How people can relate to your work or to a founder's life, all of that.
I think Shark Tank, as I told you, right, for the previous question, people do not, have access to the private segment of investing in startups. I think this, show kind of created that medium of, understanding how one can go about investing in startups. And there are platforms also available today. It's just that, a lot of KYC involved around it. I think AngelList and Pike is there. But coming back, Shark Tank, right? So a lot of pitches are being happening, a lot of elements of assessments which are being shown. One can learn out of that and try to see, how one startup can be investable or not. And also you learn a lot of metrics and elements involving around it, like what are the marketing expenses, what are operating expenses, what is inventory.
Yeah.
And I think there's like metrics on that day one. I mean, active users, or inventory day one, inventory day 30 or something like that. I'm not
Or even
very well acquainted.
valuations.
Valuations, yes.
People
Valuations,
understand
yes. But understanding valuations will take more than Shark Tank, I think.
Yeah.
Shark Tank is a starter.
Yeah.
Understanding valuations will take more, because they have to understand proof of engagement and value.
I think it's more like they brought about that awareness, and now there is a familiarity with the terms in the audience.
See,
Now covers
terminologies
it.
is available.
Yeah.
Shark Tanks just throw. I mean, like in Shark Tank, terminology is being used widely. People are grasping those terminologies, and then they're trying to use that if they're going to go around investing in this corner.
Awesome. So yeah, that's a wrap. I think thank you so much for coming, Afreed, and hope to have you more often. Thank you so much for watching, and see you in the next episode.